Hello everyone and welcome to this STP2 webinar. This is the third in the series. My name's Ben O'Brien and I'll be keeping you company for the next probably hour. There's a bit to cover in this session, so let's just get straight on into it. So this is the third in the series and there will be a little bit of repetition, some things that we want to emphasize that we have covered in the first and second webinars, but it is a series of webinars and we do recommend that if you haven't had a chance to view the first and second webinars that you have a look at those via our website or YouTube channel. And it is recommended to watch them on YouTube just so you get the ability to sort of maximize and a few other bits and pieces that are on YouTube that aren't on our website. And we'll just have a quick look at some end of financial year tips as well for both Sybiz Vision and Visipay. Even though this is payroll centric, we won't take too much of your time. And just the standard reminder that we're software developers, we're not, even though we have qualified lawyers and accountants, etc. on staff, that's not what we do as a business. So we don't provide that advice as such, and defer you to the likes of the Australian Taxation Office and your professional advisors. And this is a general information package. It gives you a bit of an overview and points out some of the things that you need to consider in making the transition to STP2. It's certainly not everything to everyone, but there will be some stuff that's not going to be overly relevant to some people, but we just want to sort of give you a fairly broad coverage so that you can sort of cherry pick those, I guess, fringe elements that are more relevant to your business as we go through the slides. So there's lots of information that the ATO are publishing and tweaking and adding to, etc. So as we've said previously, it's been a request of the ATO for software developers not to republish the ATO's information because it's very hard to keep that in coordination with each other. And so we defer to the ATO resources as they've asked us to do. And essentially the information that we provide on our website is more in the context of STP2 and Sybiz Visipay. Okay, let's continue with a bit more of the intro. And as we said in the previous webinars, you may need to review the way you process certain items, and we'll have a bit of a deep dive into that today. And there's also some new employee information, which we'll talk a little bit more about. We have mentioned that previously. And yeah, essentially we do have STP2 FAQs on our website. If you want, you can just go to your search engine, say Google, and just type in Sybiz STP2, and you'll come across that information. So you don't have to remember exactly how to navigate to it on the website, but we will have some links in these slides. And as we have mentioned before, the ATO did initially, I guess that there's a couple of missteps in their early communication on the STP2. One was that they essentially wrote to employers early in the piece and said, hey, you know, business as usual, there's not much to worry about, don't worry about it. And certainly as it's evolved, it's become clear that's not the case. But the ATO were also saying, oh, just go ask your software developers how to set up or how to treat these different types of scenarios from a legal advice point of view. And it's like, yeah, we're software developers, we're not giving that advice. And so again, just to correct that, the Software Industry Association has basically pushed back to the ATO and said, hey, can you just you know, not put us in that position? And the ATO have been kind enough to taper their messaging going forward. So some really quick pointers for end of financial year for Sybiz Vision. It's different to Sybiz Vision Classic, and essentially there's not much to it in terms of your normal monthly processes. It's almost like another month, but there is just a few little steps that we'll go through. There's also a link to a YouTube webinar snippet, so rather than take up too much of your time, you can just jump onto YouTube and have a look at the Vision end of financial year process. But the big thing, I guess, big difference is that you just need to go to Utilities, create a new financial year, and in doing so you essentially get to create the new financial year. You can lock down roles and give permissions on a month-by-month basis. Yeah, just a reminder or new information for those that have just come across onto Sybiz Vision, that you can have up to three active periods open from a processing point of view. 3 active years, I should say, but certainly you can have as many years as you wish in terms of the history, etc., within the database from a reporting point of view. So as I said, that was nice and quick. We have just released Sybiz Vision 2220 as well as Sybiz Visipay 2220, and we'll leave you to consult the what's new for Sybiz Vision. But just from a Visipay perspective, some of the things that I guess part and parcel of the transition to STP2 is we have now made it mandatory. Most people will have the contact name and email address under their tax details in the company information, but just in case you don't, that is now mandatory. And so if you go in to edit that information, you'll see that you'll have those little red crosses there, and the OK button will be grayed out. So just be wary of that. That's something to change if you don't have that information. And another thing that we've done is just designated a default payment type for leave for your pay items. So with 2212 that was released in April, we didn't have this functionality. So that essentially meant that upon processing, if you were going to be paying out leave in a cash out scenario or paying out leave on termination, you then needed to tell the system that that's what that pay item was going to be treated as from an STP2 perspective upon processing. But what we decided is that because most organisations are already using different pay items for those different purposes, like your normal leave or what the ATO now called other leave, so that's your normal taking of leave, and the cash out on termination, it's just easier and more streamlined to have you give you the ability to set a default. So when you click on that little ellipsis, you'll get a list of the 3 different leave payment types. So you've got your cash out, unused leave on termination, and other. Now, what we recommend you do is that you only designate this for cash out and unused leave on termination pay items. The reason for that is that the system will default to other. And so if the ATO decide in their wisdom that other is misleading and confusing too many people and they want to call that normal or leave taken or something like that down the track, then you won't need to worry about coming back in and modifying those leave payment types. So just you can just leave that blank for the normal leave that is being taken. And just a couple other things, we are a little bit concerned that because there's so much going on in terms of STP2 that it may be quite easy to neglect some things that are relevant to the 22-23 financial year. So as we should be aware now, the super is increasing on a yearly basis until it gets to 12%. And so essentially after rolling into the 22-23 financial year, you have to increase your super to at least 10.5% on the staff types. And I say at least 10.5 because some employers will be paying more than the legislated amount in terms of the percentage. So just be wary of that. Another thing to consider as well is if you have paid your employees or you have your employees on the basis of a package that includes super, there may be some adjustments required there from the hourly rates and annual salaries. Yeah, we'll just leave you to determine that. The $450 minimum earnings requirement in order to have a super entitlement, that has been legislated out as well from the 1st of July. So you'll need to edit that to 0. And if you are using the maximum quarterly contribution base for super, then that is also changing. So all of these things can be dealt with in each of the staff types in the same area. So just a few pointers there. What is now called the STSL rates, they are increasing. That's something that is happening on an annual basis, and so that's automated. So you get the tax scale download as part of the normal sort of rollover process, and the tax scales themselves are the same as they were previously, so they're not changing as such. So if you have someone that doesn't have STSL, then their take-home pay will be pretty much spot on in the next financial year as well. And just a couple notes as well regarding the superannuation contributions. If you are going to be wanting to get some contributions paid and into people's accounts prior to the 30th of June, if you are using Sybiz Super through Super Choice, the cutoff is the 22nd of June, 4 p.m. Melbourne and Sydney time, Brisbane time. And so just keep that in mind, that if you do want those contributions to hit the accounts by the end of the financial year. If you are using a different clearinghouse, then I'd recommend that you consult with them as to their cut-off times as well. In 2220, we also have added a couple custom reports, and essentially they're virtually identical, except one just gives you the active items, the other one shows both active and inactive items. And so what these reports do is it just highlights items that have to be addressed prior to you commencing your STP2 reporting, and there's a bit of a explanation as to what the report uncovers and the action that should be taken with the link that we have at the bottom of this slide here. So there are some items that will need to be fixed to get them ready for STP2 reporting, and then other items that we just basically say, okay, this is something that you may need to review, and the report will essentially guide you as to which is which. And you can run the report again once you've rolled into 22-23, and it will give you some information as well as to what's required from a superannuation point of view as well. So that is a little bit of a helper for both STP2 and the 2022-23 financial year. Now, in terms of what version you need for the end of financial year, normally we advise to be on the latest version, and that's certainly our preference for the end of financial year. But just a couple little pointers, you can be on 2212 if you don't have any working holiday makers and you're not using any of the new allowance categories. I'll talk a bit more about that in a moment. But if you do have working holiday makers, then you will need to be on 2220. And from a Sybiz Super perspective, you will need to be on version 2220 prior to making your first contributions for the 22-23 financial year. So that could be as late as October for people that are paying Super quarterly. So the end of financial year process overview, again, it's a little bit similar to Vision in terms of we do recommend that you reconcile on a monthly basis, use your report sets, make any adjustments that you need, rerun your reports to make sure that everything is as it needs to be from a reconciliation point of view, and back up your data. It's always good to retain an end of financial year backup and just keep that aside for ever and a day. And the other thing that you'll need to do is process your employment income statements to do the final event indicators, and we'll have a look at that in a moment as well. And then, of course, once everything's all done and dusted, roll the year prior to the next pay run. And if you are new to Sybiz Visipay, then you may want to enlist the support of your Sybiz business partner for assistance. So from an STP reco and timing perspective, it is similar to the payment summary reconciliation process. Most people are now used to STP. We've been doing it for a few years now, but there are some stragglers, not so much among the Sybiz community, but in the broader business sense. And just if you are new to STP reporting, one thing that has confused people is that if the pay period spans the end of financial year, and so you're actually paying people in the new financial year, then they need to be reported in the new financial year, not the current financial year, and vice versa. And your reportable fringe benefits and reportable super contributions are handled the same way under STP. So you do have the ability to essentially have those items be transactionally reported throughout the year, or you can use the fields on the employee balances screen to set those amounts accordingly. So the final event indicators, or what we call the employment income statement. So this essentially finalises the records for the employees as far as the ATO is concerned. Now we do have a specialised pay event for that, or a specialised event type. So in that drop down, you're probably used to obviously doing your pay events and your update events, but we do have those two additional specialised update events for the zero updates and the employment income statement. And we do recommend that you use this option because essentially what happens is the default list of employees that are selected are ones that have been paid in the current financial year. So yeah, we recommend that you get that done through that mechanism. You can, of course, sort of manually do it just as part of your last pay event. You can flag everyone with the final event indicator, but your pay events, when you do them, that only automatically selects the people that have been paid since your last submission. So hopefully you're used to that process now, and that all makes sense. And it must be done before the 14th of July. It's not something that we've seen enforced all that much, but the ATO does have a rule that if you haven't done it by the 14th of July, then you must use the old payment summary process and send off the MJUB file. So just keep that in mind, that you may be asked to do that if you miss that 14th of July date. Okay, we have obviously been talking a little bit about STP2, but now we're just going to specifically look into it in terms of some of the things that you need to be aware of. So again, just a reminder, this is part C of the webinar series, and the focus of this one is around the pay process itself and the reporting process. So the pay process in the context of the different pay items and considerations that you will need to make now in the world of STP2. And we also have a little bit of info just in general sense about STP2 and Sybiz Visipay to start with. So we were originally granted the deferral that we requested to the 1st of July 2022. So that's something that we've communicated for, I guess it's almost 12 months now since we got that deferral. But unbeknownst to us, we didn't actually apply for it, but the ATO said, hey, you guys, we want you to wait until the end of October, or what that means is the 1st of November before reporting STP2. So even though Sybiz Visipay is ready and certified for STP2 at this point in time, what the ATO have done is, just based on the early adopters to STP2 that didn't take those deferrals, they've seen there be a lot of mistakes and a lot of interaction that's been required between the ATO and employers, and with a lot of software developers originally having a 1st of July date, and given of course it's end of financial / start of financial year as well, the ATO has just basically said, no, this is going to drown us. So we're essentially going to be giving deferrals and requesting the software developers to actually treat the deferrals as a, please don't have all your customers reporting until this date. Previously, a deferral was as defined as you have up until this date, but of course you can start reporting earlier. So essentially we're just respecting the ATO's wishes in terms of staggering things out and doing hopefully the right thing by employers as well, so that they can get that attention from the ATO when they start reporting under STP2. So we've had to do a bit of work to make this process as seamless as possible for employers. So essentially, Visipay is hard-coded to report STP1 until the 31st of October, and then it will automatically start reporting under the STP2 standards from the 1st of November. So there's nothing that you need to do. And previously we had mentioned that one of the reasons we chose the 1st of July is that we weren't a big fan of a mid-year transition, just because it does have the potential to cause confusion. We've done some additional work behind the scenes to make that less of an issue when you transition across. So we've had to do some work because of the ATO asking us to use this deferral. So we've minimised but haven't eliminated those potential points of confusion, and we'll talk a little bit about them a little bit later on. But yeah, certainly it's going to be as close to a seamless experience as we can make it for you. So if you really want to start reporting STP2 earlier, get in contact with us. I did mention that it's hard-coded, but we do have an override. Sybiz ourselves will be reporting STP2 from day one, from our first pay in July. And conversely, if you do want to defer for longer, you will need to go through your deferral process with the ATO directly. So, and we will also need to be involved in terms of overriding that hard coding within Sybiz Visipay to suit your deferral. So you will need to get in contact with us as well, because as I said, the software is following the path of least resistance for the masses, and that is to automatically cut across to STP2 from the 1st of November. And just a reminder as well, we'll mention this a few times, that Sybiz Visipay 2220 is the minimum required version to actually start reporting via STP2. So a few of the early insights, we have talked about these previously, essentially, the ATO is saying around about 90% of the issues that they're dealing with are things being incorrectly reported by employers, or they haven't set up their systems properly, and so that's causing a lot of interaction between the ATO and employers to get those things right. So generally speaking, there are a couple exceptions, but generally speaking, if something was reportable under STP1, it's reportable under STP2, and reportable in the same way in a lot of senses. But obviously, with what they call the disaggregation of gross, there does need to be a lot finer grain reporting, which we'll talk about in the following slides as well. So some of the mistakes, public holidays were being processed as leave, because I think there was a lazy definition at one point in time that basically said if someone's not at work and they're getting paid, then that's paid leave. And so people said, okay, well, it's a public holiday today, people aren't at work and they're getting paid, therefore we need to report that as leave. That's not the case. It's just your normal earnings. The allowance categorization, people have started reporting reimbursements or allowances that were previously unreported. That's not changed in that respect. So if an allowance was reportable previously, it's reportable under STP2 as well. The tax treatment of allowances, similarly, there's been some changes there where people have gone, okay, well, I'm reporting this thing now, whereas I didn't before, therefore it's got to be taxable. That hasn't changed. And again, if you're not sure about these kind of things as to what's reportable and what's taxable in terms of allowances, the ATO's got some good information on their website about that. Also the separation of earnings, people were trying to shoehorn additional or things that they should be disaggregating into an aggregated pay item, and weren't separating those earnings properly. And some of the issues to do with overtime, some things being classified as what they had been previously rather than overtime. So in a general sense, if something can be classified as overtime, or the basis for it is overtime, so if leave loading is provided purely because of the lack or the loss of ability to earn overtime, then that actually gets reported as overtime. So you will need a separate pay item for leave loading if that is a scenario that applies to you. Similarly, if someone were to work overtime and they were given a bonus because they kept on taking those overtime shifts, and you wanted to thank them for taking on that extra load and gave them a bonus purely for that, then that gets reported as overtime as well, rather than as a bonus. So Services Australia, we've heard some more information about this, where with the child support reporting is that some people have described the way they're treating employers as going rogue. They have been threatening some employers, and it's been an unpleasant experience for those employers that are reporting the child support information, so much so that the ATO and Services Australia are having some emergency meetings to try and get everything on the same page. So employers have even been berated for doing things that are explicitly they're asked to do in the Services Australia guidelines. And so, yeah, there's some massive teething problems there that you may recall that Sybiz made the early call to not include the child support reporting, as it's optional at this point in time. So we just took that out of the software because we heard what was going on with employers, and we don't want to subject you to that. So let them get the teething problems out of the way with other employers. Now, last time I did use this little analogy of the difference between STP2 and STP1 in terms of what you guys need to do from a processing and reporting point of view, is that you are now needing to be a bit more precise. So previously with STP1, when it came down to things like earnings and allowances, you could basically kick the ball into an empty soccer goal, and things would go in the right bucket as far as reporting to the ATO is concerned. So you didn't need to be anywhere near as precise, and things would still end up where they needed to be within your reporting. Now we're aiming for the basketball hoop, so we do need to make sure that those pay items are categorised correctly so they can end up being reported correctly. And just to put that in context, the testing process that we went through for STP2 was easily 20 times larger than the testing process we went through for STP1 in terms of the tests that the ATO provide us as a conformance suite that we need to make sure we pass all of those tests. So it's a significantly greater testing regime, which underlines the complexity of all of the different scenarios, etc. And so, as I said, Sybiz has passed those tests. We've been rubber stamped for STP2, but yeah, it is a different ball game compared to STP1. So, okay, we did mention this in the previous couple of webinars as well, that we have automated the updating of the tax treatment. So there has been quite a change to this panel within the employee records, and so essentially Sybiz looked at the way the employees were configured and put every setting in the right bucket. But there are some things that you'll need to do, like additional information in terms of working holiday makers need to have a country code designated, and your tax treatment options need to be set accordingly as well. So just review that information. Now, just on the tax treatment codes, or tax treatment options rather. So what happens behind the scenes is all of these different settings come together to form a 6-digit code that the ATO uses to see the decisions that you make in terms of how you're taxing an employee. So the tax treatment options available from that drop down, most of your employees are going to be set to regular, and you are going to have the working holiday makers there as well. But there are new categories for no TFN and ATO defined. So, for example, if you have a downward variation that's legitimate and signed off by a letter from the ATO that you can have a fixed tax rate for an employee, then you can use the ATO defined. The no TFN may be something that comes into play. So if you have a new employee start and they don't supply you with a TFN within the required time frame, then you will need to set them to no TFN. And you may be thinking, okay, well, when that happens, normally we set them to the tax scale 4 or the tax scale 4 non-resident versions. So the ATO should know, but we don't actually, surprisingly, the actual tax scale that's in use doesn't get reported through to the ATO. So in that sense, there is that sort of redundancy, if you like, where you do need to set them as no TFN in that circumstance. So these are the kind of little gotchas that are catching people out, where the ATO will see that someone is now getting taxed a lot more than they were previously. And even though they can see that a placeholder TFN might be in play, you still need to set the tax treatment option to no TFN. And similarly, now we've got the employment basis. This has been automated in terms of updating your employee records. Now we've done this on the basis of basically saying if someone is 35 hours plus per week, we've designated them full-time using the ABS definition. There are other definitions out there, but there's no official definition. So that's the one that we have used. And if a staff type is casual, then we've flagged them as casual. Otherwise, it's been part-time. So that's the automation that we've had there. And you may have some edge case scenarios that you want to go and check those employee records. So feel free to double check those. And essentially, some of these bits of information are now taking over the old TFN declaration. So we still have the TFN declaration within the software, and you still need to get a signed physical copy and retain that. But yeah, essentially, STP2, one of the advantages of it is that it will do away with that separate process for your TFN declaration and also the employment separation certificate on the other side. So from a pay processing point of view, you will require more pay items. And yeah, essentially, we're going to be going through the next few slides. Just one of the other bits of feedback that we had from the ATO is that perhaps employers aren't sort of taking things seriously enough. So we just want to give you an idea as to what's required from a finer grain reporting point of view. And we do defer you to this ATO information. We are just going to be going through it just to provide the context. And for those reviewing this webinar down the track, the information that we have on the following slides is current as at the 15th of June 2022, and the ATO last modified the information on the 3rd of June 22. So if you do want to go and refer to that ATO quick reference guide, then yeah, be aware that the last modified date will be down the bottom of that page, and it may have changed. Unfortunately, though, the ATO don't keep a log of what those changes are. They don't highlight what those changes are. So yeah, that's just something to be aware of. And I just make that point because, as I said, the ATO doesn't want us to republish their information because it can get stale and mismatched as time passes. So I just wanted to provide that context as we look at information the ATO has published on the next few slides. Just on that, if there are any questions, I should have mentioned this in the intro, feel free to put them through the Teams chat panel there. Include your email address so that we can get back to you, and we'll endeavour to answer your questions as we go throughout this session. But I do ask that you just wait until later in the session to ask your questions, because chances are we're going to be covering it anyway. So just bear that in mind. If you are watching the recording as well and you have some questions, jump on the Sybiz website, go to our contact page and fire them through. And what we'll do is we'll use these questions to expand on the FAQs that we have on our website. But just another little caveat on those questions. Again, Sybiz aren't in the process of giving legal, accounting and payroll advice. We can give you advice on how to do things in Sybiz Visipay in the context of that advice received from other sources. So yeah, please don't ask us questions as to how to interpret something under Fair Work or the Superannuation Act or anything like that. But yeah, we can certainly help you get your pay items set up accordingly if you're struggling with that. Okay, so just before we jump into these slides, there are a lot of slides coming up with a lot of information. We're just going to be flying over most of them and just pointing out some of the things that are a little bit perhaps counterintuitive for you to be aware of as you transition across onto STP2. So the idea is just to give you, I guess, that quantum of the different considerations that you may need to make in your organisation. For a lot of you, a lot of this information won't be relevant, but unfortunately we don't know exactly what's relevant to each organisation, so we'll try and get the balance right as we progress. So some of the things that are going to be changing in terms of the disaggregation of gross are that things like bonuses are now to be reported as bonuses and commissions under that bracket, and similarly directors' fees do need to be treated separately as well. So you will need separate pay items to get these items into the right buckets. Overtime is something that is changing a little bit as well. So generally, most people should have their overtime pay items configured correctly already, as they would have been using them. But as I said, there are those curveballs there where something may be a little bit ambiguous. It could be treated as leave or it could be treated as overtime, but in most cases, overtime will win the day. So if you are paying loadings that are demonstrably referable to a loss of overtime, then that is to be reported as overtime. So you may need to, you will need to decouple the leave loading from the actual leave pay item and use two separate pay items in those circumstances. If you have a situation where there isn't that nexus between the loss of overtime and what you're paying for leave loading, then you can continue as you were previously. Toil, or the cash out of toil, is another thing. This is probably a little bit confusing because if someone actually takes time off in lieu, it is treated as leave, leave other. But if they cash out the time off in lieu, it is cashed out on the basis of being treated as overtime. So again, a little bit quirky, that one, but and just to give you an example of how you could potentially do that, you could set up a pay. I will show you the pay items on the next slide, but essentially you need to, because you're not treating the cash out of time in lieu as a leave pay item, you then would need to separately reduce the remaining time off in lieu hours, and you can do that with what we call an in lieu pay item, or you can of course go in and manually change those accruals in the employee's record. But this mechanism by using the in lieu pay items, which can be used for all different leave types, not just time off in lieu, that then gives you the ability to adjust those hours transactionally, and the employees can see that on their pay slips as well. So this is just a setup of those two different pay items. And because we do need the cash out of toil reported as overtime, the type needs to be overtime, and generally super does not apply, but you may have an override in the instruments that you're using to pay your employees, or the contracts, awards, etc. So just make your own adjustments as far as that's concerned. And the in lieu pay item, that's a type of in lieu. Now, this isn't a financial transaction. It's not reported to the ATO, these in lieu pay items. It's just to make a transactional adjustment to leave balances. And that's how to set those two pay items up. And as I mentioned before, if you are paying leave loading purely for the loss of opportunity for overtime, then this is how you would configure that pay item. Now, this is assuming a 17.5% loading. Now, this is going to be a little bit tricky, but if you have a look at the rate box there, that rate is set at -82.5, and that's the way it needs to be configured to essentially get to that 17.5% loading and treat it as overtime. So a little bit counterintuitive there, but that is the way to configure those pay items within Sybiz Visipay. And some of the other changes to gross is there is now a new lump sum W payment. Now, this is a fairly rare thing, but it's essentially a bonus that's paid to employees in certain circumstances, such as ending industrial action or paying an ex-employee to return. So just bear in mind that those lump sums now exist. From a lump sum E point of view, this is another thing where the ATO are now noticing more mistreatment of lump sum E, where people have thought lump sum E is just purely back pay, but it is in a lot of senses back pay only in certain circumstances that is greater than 12 months from the date of actual payment. So just bear in mind that if it's not a lump sum E, then it's essentially whatever the pay items are that should have been paid, whether that's an allowance or an earning, that's how it needs to be paid when you're doing a back pay that doesn't qualify as a lump sum E. So from a leave point of view, there's a whole heap of different types of leave. You may or may not have some of these in your system. They're not compulsory by any stretch, but just bear in mind that you do need to report them as other paid leave. And again, we don't like the terminology of other, but that's what it is. And yeah, just again, that time off in lieu, if you are taking that time as leave, then that does get reported as other paid leave, not overtime. It's only the cash out and payout on termination that gets reported as overtime. And some more changes to do with the RDOs that are cashed out. That's a leave type C. It's for C for cash out. And standard annual leave loading, that is leave type O for other, etc., etc. And you do have now specialised leave for paid parental leave, so that's got its own category that does need to be reported separately. Similarly with your ancillary and defence leave, so things like community service, army reserves, and things of that nature. And your cash outs are treated separately as well. So we do recommend, you don't have to, but we do recommend that you use separate pay items for your cash out and paid leave on termination. And again, just that emphasis of the differential treatment of time off in lieu, depending on whether it's taken or whether it's cashed out. And so on and so forth. We have also the unused leave on termination that needs to be reported separately and categorised separately. And yeah, again, the public holiday, the ATO have asked us to emphasise this, just report it as if the employee had worked. So just as their normal gross, and you can use a different pay item, but you'd categorise it the same way as you would their normal pay. So it's up to you as to whether you use the normal pay item that you use for if they were attending, or a separate pay item for the public holiday. But just remember that it's not classed as leave. So there's a whole heap that aren't changing as well. So some of the allowances that people have started reporting that they don't need to. So the allowance for the travel or domestic travel, etc., that doesn't exceed the ATO reasonable amount. People don't need to report that. It wasn't reportable previously under PSAR or STP1. Obviously, the excess needs to be reported as it was previously, and so on and so forth. And from a lump sum point of view, the treatment has been relatively consistent between the different reporting methods, and that's carried forward into STP2 as well. Just we've talked about that lump sum so just be aware of that definition as well, so you can categorise things accordingly there. And also from an allowances point of view, here's I guess the major changes, and this is just something again to emphasise that the 3 new separate leave allowance categories that we have for STP2, the tools, the qualification and certification, and the tasks. In brackets there, that's just the ATO code, so you may see that on the ATO website or in different communication. But so yeah, essentially you can configure those allowances in version 22.10 and above, but we recommend that you don't actually use them. In fact, we insist you don't use them until you're on 22.20 because they won't report under STP1 on earlier versions. So 0 will be reported for those items. So just make sure that if you are going to be using those, even from the 1st of July when we're not yet using STP2, you still need to be on version 22.20. You do have the option, if you so choose, to continue to report those allowances as other under STP1, but certainly before changing to STP2, you will need to recategorise those allowances. And yeah, so essentially, as I said, don't use those new allowances. There's just some examples of what they're classing as the task allowances. Some of them won't be relevant to your organisation, but these are just examples that are just ripped straight from the ATO website. I should just point out as well that when you do go look at the list of these pay items on the ATO website, they've got them listed in alphabetical order by payment type. We've listed them in logical order based on the type of pay item that they are. So there is a difference if you're comparing the 2 sets of data there. And there is now also the need to categorise your other allowances under STP2. So this is something when you run that customer report we were talking about, if you do have other allowances that are configured, then it will give you a listing to say, okay, these are other allowances for which you haven't actually supplied the ATO code, so you'll need to go in, modify those pay items, and we suggest you do that at your convenience, because once that information's in there, then that's one less thing you're going to have to worry about prior to reporting under STP2. So there have been some additional changes to the other allowances as well, and yeah, just these are the kind of things that you do need to consider from a categorisation point of view. I won't go into too much detail there. You get the gist of what you need to do from an other allowances point of view. And things aren't changing as well on the allowance side of things for a number of cases. So again, because these aren't changing, I'm not going to worry too much about that. But one point just to make is that the ATO has now sort of seen employers not perhaps treating things correctly from these allowances point of view. So you may get a little tap on the shoulder from the ATO as you start reporting under STP2 and giving them more information. Now, we did talk about this in the last webinar as well, but this is another major change. And this is something that may be relevant to your organisation, specifically around the non-super salary sacrifice. So just to make this point pretty clear, is that from a salary sacrifice to super point of view, there's nothing you need to change. That will continue to operate as it has in the past in terms of how you need to set it up and how the software works and how it is reported. So we got some smarts behind the scenes to transition that reporting from STP1 to STP2 accordingly, so you don't have to worry about those salary sacrifices to superannuation, but you will need to have a change in behaviour in terms of the way that you treat your salary sacrifice from a non-super perspective. So previously it was possible to, especially if it was an exempt benefit or below thresholds, you didn't actually need to worry about even reporting it through the payroll system itself. But now things are changing. So if someone is doing a salary sacrifice to, say, an exempt benefit, so portable electronic device is the classic example, then that salary sacrifice now needs to be reported. And we'll talk about that through this simple example here. So it gets reported differently under STP1 and STP2. Previously, say a salary sacrifice to an exempt benefit, that was virtually invisible to the ATO. They just saw your gross reducing, whereas now we need to basically report the gross from a pre-sacrifice perspective. So the example that I have here, $60,000 salary, they're doing a $3,000 salary sacrifice, whether that's super or not, it gets reported as a salary sacrifice item, and the gross is grossed up to its pre-sacrifice level. So again, we do that heavy lifting for you behind the scenes. So yeah, essentially those concepts remain the same. So the idea is to reduce the tax, maintain the super entitlement, in most cases maintain the leave entitlement, and but what is happening is the difference where pre-STP we reduced your gross earnings according to pre-STP2 we reduced the gross earnings, but STP2 requires us to preserve those gross earnings and show them at the pre-sacrifice level. So from a non-super salary sacrifice, this is where it is going to change for you. So the typical examples are those exempt benefits, and we do see a lot in the health sector, etc., where they have the ability for the 57A fringe benefits, the salary packaging that occurs there. A lot of times that is done through a salary sacrifice arrangement. So essentially the difference between the STP2 and pre-STP2 is that gross earnings reporting. And previously you didn't need to report the salary sacrifice in that circumstance, but now that does get reported through. So there's nothing for you to worry about from a super salary sacrifice point of view, but from a non-super, you do need to do some things a little bit differently. So so essentially what you will need to do now is set up a deduction pay item. Previously, if you were doing this transactionally through the software, you would typically use a negative earning item. So if someone was having a periodically paid a sacrifice that was occurring over a number of pay periods, you may have modified their pay profile for that purpose and put in the negative earnings item. That is going to need to be replaced by a deduction item. And yeah, essentially you can, once you're on version 22.20, you can start setting those up now and replacing the old negative earnings with the deduction pay items, and we'll take care of things behind the scenes in the STP1 reporting and report what needs to be reported. And when you transition to STP2, it will automatically report what needs to be reported as well. You do, of course, have the option to make these changes in that transition from STP1 to STP2 reporting, but they can be done as soon as you're upgraded to 22.20. So essentially, the other thing that you need to do as well is upon processing, you need to, although you can set this up in the pay item itself, in the pay profile itself, is that you need to designate the salary sacrifice deduction item. So these will need to be configured against your employee records, and you've got the choice if you do have people that are just salary sacrificing for a whole range of things and you don't particularly care about what that is. You can just create a single salary sacrifice item against the employee record for an astronomical amount and just chip away against that forever and a day. But if you did want that fine-grained reporting of saying, okay, these are the buckets that they're allowed to salary sacrifice in for various dollar amounts, then you can set those up as well. So you do have that choice. And just on that, if you are part of an organisation that's got hundreds of employees that are in this category, say doing the salary packaging, the 57A fringe benefits, that is something that will take you some time. We don't have an automated process for that, but we do have some scripts that Sybiz can use, so you can coordinate that through your business partners, and we can help you update your software and update your employee records and pay profiles, etc., to get ready for this change in reporting. And then, yeah, terminating employees is another thing that we'll change, there's more termination reasons, and the reason, pardon the pun, behind that is this basically overtakes the need for the employment separation certificates that you may have been providing to some of your employees upon request previously. And essentially, the good news is that your STP2 reporting process is virtually identical to what you had under STP1. So you go through that same process to do your ATO transfer. Even when we make that transition from STP1 to STP2, then that will occur automatically. So there'll be no additional steps that you'll need to make from the actual reporting perspective. So as long as you have all your pay items, etc., set up correctly, and are using them correctly, then it'll be a smooth transition for you, which is, I guess, one of the good things. And yeah, essentially we do see that greater care is going to be required under STP2. When you go to roll your periods in the new version, so from Visipay 2220 and beyond, if you have neglected to do all of your STP2 reporting, that is going to be more in your face. Previously, it was just a little subtle warning, and you need to hover over it to find out what the system was complaining about. So we still don't stop you from rolling the period, but we're going to give you much more robust in-your-face warnings to say, hey, you haven't reported all the pay slips under your STP reporting. You might want to consider going back a step and doing a bit more STP reporting before rolling the period. And I think we can see now that the STP2 data is more complex. It is like just through that sheer increase in complexity, it is going to be easier to create mistakes and get a little tap on the shoulder from the ATO. Now, the process that Sybiz uses with SuperChoice acting as our what we call the sending service provider is that's another layer of validation and quick response that you'll get. So if you try to sort of submit something through Visipay that's not quite right, Visipay might say, hey, you guys, you've got to go back and have a look at this item for this employee. And if that gets through Visipay, then there's another layer at the SuperChoice level that will also let you know if something's not quite right. Now, the messages are essentially reporting what the ATO is reporting, so they're not necessarily user-friendly, so some of them might not make all that much sense. And we are quite confident with the processing that we've been through, the testing that we've been through. The reason I don't have an example of one of these messages is that we can't think of any that haven't been covered by the testing that you're likely to encounter. Yeah, just if you do get something, there could be something obscure that just hasn't been thought of. Just look for the keywords in the error message, and that should give you some sort of guidance as to what the issue is. So that's the rule of thumb there. And this is, I guess, one of the examples of where we weren't a big fan of a mid-year transition from STP1 to STP2, because if your employees go on to their MyGov and have a look at their employment income statements, they're going to see a lot more information under STP2. And so to have that happen partway through a financial year, if they check 1 week, this information would be a lot more summarised. And then, especially if they dart their eyes down to, say, the gross amount of salary and wages listed there at 24,000, whereas previously it probably would have been listed at that 43,000 that you can see in the header, you've got to get some questions. And so, unfortunately, with this mid-year transition, there is that risk factor. But yeah, that's just the nature of the beast, unfortunately. Hopefully that won't give you too much grief, and we do recommend that you do let your employees know that there will be a change in their MyGov reporting from 1 week to the next as we transition from STP1 to STP2. And I guess another key point here is that if you've set up all your pay items for STP2, then essentially all these year-to-date figures will reflect the STP2 information as soon as the change in reporting occurs. So there'll be nothing further for you to do. So that is pretty cool in that respect. Just to provide a bit more perspective on that, if you decided to perhaps not start disaggregating some of these pay items prior to reporting under STP2, then yeah, you'll not necessarily have the information as disaggregated as possible when reporting under STP2. Now, the ATO are all happy with that, So that's their issue to work through with these mid-year transitions. But yeah, just keep that in mind. That's something we were trying to avoid, purely to make your life easier. It doesn't make our life any more difficult, but yeah, we just don't want employees and employers to have too much confusion in that process. So your timeline to transition, we do recommend that you are ready for 1st of July, even though we now have to the 1st of November. There are some edge cases where some employers will have a lot to do, mainly around if they have lots and lots of allowances and lots of employees with non-super salary sacrifice. But yeah, it's good to get ready for the 1st of July. Hopefully by now you've upgraded to version 22.12 that was released in April, and you've gone through and checked your staff types, checked your employees, you've added some new pay items, and but you may have been sitting back waiting for 22.20 to come out, because if you don't have a lot of employees and your payroll's not overly complex, then yeah, there's no reason to sort of get on top of it back in April. You can jump onto 22.20 now, which was released this week, and it's all ready for the STP reporting from 1st of November, although we can tweak it to start from the 1st of July. And again, just making this point again, if you do want to defer beyond the 31st of October, you do need to arrange your own deferral and get in contact with your business partner so we can override the deferral date that's hard-coded into the system. So from a pre-STP2 focus point of view, upgrade to 22.20, make sure the contact name and email information is present under the company tax details. If you remember back 45 minutes ago when we talked about that, go through your pay items. The reason we showed you all those slides today with all those different pay items is just to give you an idea as to the things that you do need to consider. A lot of them won't be relevant, but these are the kind of things that we need to consider. Check your other allowances, make sure you've given a payment summary code. So a lot of these kind of things will be highlighted when you run that custom report that we talked about earlier as well. Yeah, revise your pay profiles. Consider the impact on timesheet import. So if you are using a timesheet import program, it may not be something that you've had to worry too much about for a while, but there are timesheet identifiers that help the timesheet program map through to the correct pay items. You also need to add any salary sacrifice items to relevant employees. Now, there are separate pages on our website to do with a lot of these kind of things. So just use your search engine. If these things are relevant to you, just use the keyword Sybiz and whatever it is that you're looking for, and you should come across the right page on our website where you can navigate through the menus. We've got a couple of links coming up as well. Yeah, just plan those changes to the pay profiles. So again, with the transition to STP1 to STP2, if you are on version 22.20, then essentially you can start changing those pay profiles progressively in the lead up to STP2 reporting, and we've got the smarts behind the scenes to report those things the way they need to be reported under STP1 while we're under STP1, and then seamlessly report them as they should be reported under STP2 once we're reporting under STP2. But again, just emphasizing that that's only from version 22.20, that you can have that flexibility and that seamless process there as well. So as I mentioned earlier as well, if you do have a lot of non-super salary sacrifice or a large number of allowances that require changes, then Sybiz can provide some assistance via your business partner. But pretty much everything else, we're pretty sure there's not going to be a huge burden in terms of changes that are required. Most cases, it's going to be reconfiguring some of your pay items to provide some additional information, perhaps adding some new pay items for those different circumstances that hopefully you've made some notes from those slides that we went through earlier, and just adding some information as well to some of your other allowance pay items. So we don't think it's going to be too much of an issue for you. So once you have rolled into 22-23, again, the reminders that there are changes in the super side of things. So run that custom report again, and that'll just go through and let you know whether you've managed to update all your staff types accordingly for those new changes. Have a look at your pay profiles once you have rolled into 22, 23, even though we are reporting under STP1 still. If you're on version 2220, as I said, you can start making those changes from the 1st of July. And again, just the STP reporting will automatically commence from the 1st of November in your Visipay software. So there's nothing further that you need to do once you've got your pay items configured and you've checked your employee records, pay profiles, etc. And yeah, so we've worked pretty hard to make that as easy a transition as possible, particularly now that we're doing it partway through the year for you. So, and again, just 2220 is the minimum version that you need for STP2 reporting and a number of other things as well. So we do recommend that you get onto that version as soon as possible. So a bunch of resources that are at your disposal. These slides will be provided to you, so you can click on the links, but of course you can always use your search engine. So you can just type in Sybiz space STP2, hit enter, and you'll probably get the right information in the first result. I use Google, so I can speak for Google's pretty good at this. If you're using a different search engine, I'm not sure whether it's as good, but yeah, similarly with ATO information. So if you wanted to, like the ATO is using these massive web addresses for these things, but if you wanted to go and do your own deferral for STP2, just ATO space STP2 space deferral, enter, and it'll take you to the correct page for that process. So with that, we did pretty much finish on the hour. So that was pretty good planning. And yeah, so just a reminder that if you do have any questions, if you're watching the recording or something comes up later, go through the Sybiz website and to the contact page and just send through your question. And chances are other people wanting to be asking the same question as well. And as I said, we're going to build our FAQs. Certainly consult our FAQs before you ask the question, because it's probably something that we've already anticipated. And so there will be information already on that topic. And again, use your search engine just with the keyword Sybiz, and it should give you a direct link if it is something that is already has already been asked. Yeah, so I guess with that, in closing, just wish you all the very best for the end of the current financial year and the best for the start of the new financial year. Hopefully we've allayed your concerns in terms of the mid-year transfer from STP1 to STP2 and made things clear enough in terms of what you need to do for your own deferrals and things like that if you require them. So with that, thank you very much for your time and all the best, and have a great weekend. Cheers, bye.